All right. We are back on the morning show. I am here live from beautiful Avalon, New Jersey. I really love it here. We got Steve Strazza in the house, live from Key West. We got Alfonso, the chart master Flex, in from Caracas. And of course, we got Izzy on the ones and twos. Might have some special surprise guests come by. So please stay tuned. Man, markets are moving. Things are happening. We got a lot to talk about. Strazza is putting out doubles every single day. Two more positions doubled yesterday. Another one the day before. We got a lot to talk about. Izzy, hit it. Oh, we back on the morning show.
Good morning. And it is a good morning.
For someone who talks to me every single day, am I in a better mood when I'm at the beach, or is it about the same, you think?
Your mood, it ebbs and flows. And maybe you have higher highs at the beach, I think.
Yeah.
Yeah, you think so?
You know, I've been trying to teach my daughter that there are things in life that actually are really magical, like actual magic, and the ocean is one of those. You know, walking on the sand is so good for your body. The sun, salt water, like if there's any real magic, you know, she watches a lot of like princess shit and there's magic everywhere, but like real magic in real life, you know, and then we're talking about food and like steak. I tell her that steak is magic, right? It has real powers to help you. So now every time she eats food, she's like, Daddy, is this magical? You know, are pancakes magic? I'm like, pancakes, not so much. The eggs, yes. The eggs are magical. The pancakes, you know, they're delicious. Not so magical.
And I'm with you. I had a similar experience last night, actually. You'll like this. There's a certain freeness to being by the ocean, having the ocean like as a close neighbor. So we were at Louis actually last night celebrating.
Ooh, who's fancy?
Yeah. And after dinner, we went and we just sat on the deck, right by the water, and like finished our drinks and hung out until it got dark. And Rose looks at me, Rose turns to me and goes, because we're talking about moving, we're looking at different places and all this lately. And she goes, let's never not live on the ocean. I said, deal.
Yeah.
To hear.
Yeah. What do you call it? Saltwater therapy?
Yes, that's saltwater therapy, man. It's just so good for you. I can't explain it. I don't know the science, but there's something there. Makes people happy.
No, definitely. People are just in a better mood. You know, also when you talk to people, everyone's like, we're at the beach. Like, how are you gonna be mad? How are you gonna be upset? Like, this isn't like gross, you know, 8th Avenue and 37th Street, like in New York City, where just everybody's just angry all the time. You know what I mean? Like, this ain't that, right?
No.
It ain't that at all. Listen, we got markets moving. We got things to talk about. Steve Strazza coming up with doubles every day. I'm gonna start calling you the double man. Double man, you like that?
Look, commodities starting to reward us. We try to get ahead of these trends and anticipate with the breakout multiplier trades, because when you get a good entry, the trades are just that much juicier. So we've been in the commodities, we've been taking shots, and now finally being rewarded in a big way, going 10x today probably on our first Majestic calls. With
Ooh, 10x, babe. Ooh, the 10x Strazza is better than the double man, isn't it?
And everybody's going to look at silver today, but watch copper. Copper is like itching to follow, I think.
All right. Izzy, hit it. Let's go. State of the market. All right, ladies and gentlemen, we got big stories, big things moving this morning, and it ain't the stock market. S&Ps are flat. It is doing nothing. Hanging in there flat, 59.83. Dow flat, 0.0, Mr. Blutarski this morning, 42,500. NASDAQ also flat, 21,775. When I tell you there's nothing happening in the equities market, folks, there ain't nothing happening in the equities market this morning, at least not yet. But bonds are moving. Bonds up 0.5%. So 4 bonds, that is big. I am long. 114 there on the 30-year futures. You got crude oil up 0.5%, 63 and change. Copper up 2.3%, $5 even for copper. Gold up 0.5% as well, 34.17. But the big story of the day, silver up 4%, 36 bucks an ounce. Shout out silver. With the VIX still under 18 over in funny money land. We'll get back to precious metals now in a second. Quickly, let's do Bitcoin 105,500 up 733 points. It's about 0.75%. 105,500, just under that. You got ETH 26 and a quarter, up about 2/3% as well. You got Solana 154 up 0.5%. Also, total crypto market cap. Spencer Israel, you're out there listening. 3.27 trillion. 3.27 trillion. What stands out the most? Is it silver? Dumb question.
Shout out Spencer Israel. Yeah,
Shout out
and
Spencer Israel. We're rooting for you, buddy. Spencer's on no sleep, hasn't slept in days, making babies, poor babies. Like, Strazza, one day you'll see when you have the baby, you got to go skin to skin. So you got to put the baby like on your skin. And then there's like sweaty, hairy Spencer, the poor kid's getting hairs on his mouth.
I don't know about that.
Yeah, it's called skin to skin. It's like a real thing. Like you got to do it. So you put the baby on your chest, and Spencer's got this like sweaty hair all over the place. Poor kid.
Where'd you learn that? Discovery Channel? That doesn't sound right. I don't know about that.
Dude, you know how many kids I have, bro? I'm like a professional.
Tell me.
Dude, they're multiplying. I got my nephew with us for the last week and stuff. So there's just more kids showing up.
Wavy,
after 3, what's the difference? Make it 10.
Wavy says HBM to play the copper breakout. I'll tell you, JC, it's probably the best looking one. But I think you could keep it simple too. Just go to the old reliable vehicles. I think Freeport's great, very liquid in the options market. And then Southern Copper, if you want to just play something through common stock, you got a big level here in the SCCO. But what I'll say about the breakout in silver is that it looks decisive. And I love to see that, right? When we're breaking out of a multi-quarter range here, really this range dates back to May of last year, you want it to break out with authority. And we're seeing the best day, 2 of the best days here just in the last, I guess, 4 sessions now, 2 of the best days since October of last year. So that's great. That's the kind of momentum that you want to see accompanying the breakout. So this looks good to me. This looks like it's going to be a valid resolution, I think.
That Southern Copper looking pretty good, let me tell you.
It's coiled up. Coiled up at a big level. Yeah. Right?
That's Southern Copper. Yeah. Look, here, we can throw that up right now just for the folks.
JC, the international ones are working. We just put out a post last night. We gave out some trades on
slide 2. Southern Copper not considered international technically.
They should be, right?
Yeah.
I think they're based here. They're listed on the major exchanges, but they're doing their business over there.
Peru, right?
I think so. I would imagine they have a number of mines. They're one of the bigger players.
Isn't it the largest component of the Peru ETF?
I think we learned that like a week or 2 ago. Shout out EPU. BVN too. Looking good. I like that BVN.
Dude,
but listen,
Peruvians.
The story with commodities and the right equity market vehicles to play these, assets that we're talking about, breakouts in silver and copper, the best vehicles in the equities market, they're going to be overseas. They're going to be ADRs. A lot of them are going to be OTC names, super illiquid stuff, weird stuff. Call them Matt Warder stocks.
Yeah. No, I like that. I like what you did there.
Strange natural resource mineral plays from God knows where. A lot of them will be listed in Canada. But the best names are pretty much usually overseas. So we dove in and outlined a couple of trades. And JC, I swear, majority of the names I'd never heard of.
Walk through some of these doubles, please. Walk through some of these doubles. By the way, Fonz, if you could drop the link in the chat for tomorrow. Tomorrow, Steve Strazza going live with Jason Purse talking commodities.
I think it's time.
That link and be right back.
Bye, JC. I think it's time. So we're going to go through like our whole commodities playbook. I feel like I'm blurry here. We're just going to run through everything. Our full universe. We cover about 30 of the most liquid contracts. We could talk about some weird ones too, but we want to talk about the ones we could actually play and make some money in. And some of these bigger commodities contracts like silver and copper, we have a ton of vehicles in the equities market. So we're going to go through some ideas, talk about exactly what corners of the commodities market we like right now, and then share some vehicles that we're using to express that bullish thesis. I think, if anything, we were a little bit early, right, with all this commodities talk. We've been doing it for a couple months now, really. But it's happening now. You're seeing it now, right? You're seeing that gold moves first. Okay. Now silver. Okay. And then copper. I think copper's going soon. And you got to stare at that crude oil chart and ask yourself, the breakdown happening? Is that the bet I want to make? Copper, silver, gold, new all-time highs? Crude oil breaking down from a massive top? I don't think so.
Um, can we I want to pivot here and I want to hear what your thoughts are on this. Throw up slide 8 if you will. Izzy, please. Um, so with all this talk about
Yeah.
commodities,
Love
with
this.
all this talk about um, you know, expansion, perhaps into energy. Gold went first, copper, silver moving, energy would be next. All these things happening.
Yeah.
Could that happen in an environment that bonds are doing well?
Would that be funky, right? I like it. Let's go. I don't know,
Hold on.
man.
So explain. Hold on. I don't know what you're so
Usually,
giddy about. I don't know why you're
yeah.
so giddy. Can you explain to me what's so funky about bonds going up in that environment?
Well, things are changing, right? So we're used to interest rates being positively correlated with commodities. But I'm used to the dollar not being positively correlated with oil too. I was used to a lot of things from an intermarket perspective that have changed over the course of the past few years. That's all
Yep.
I'm saying, right? So I'm open. I'm open-minded about all that. I don't
Throw up the
know.
zeros. Can you throw up the zeros, please?
Dude, a lot of talk about the zeros lately.
Well, if the bonds are gonna move, that's where you're gonna get the most juice, right? Derivatives
Explain.
aside.
Explain.
Well, you're just gonna
So
get
these are
more juice there.
these are
So
zero.
this is like TLT plus, right? So you're just if bonds are going to move, these things are going to move the hardest. I mean, it's really all it is. So it's just a higher beta play on the TLT. Here's the thing though. The options market is not that liquid. So if you're going to go options, just trade the TLT. I mean, that's how I
Yeah.
look at it because you're getting the most liquidity. I'd rather be in the more liquid area,
Yep.
even though it might not be the quote unquote best vehicle. But we're
Yep.
already in the derivatives market. You're already getting the juice. So for me, the
Right.
liquidity is more important. So I'm going to be in the options, which I am. I'm in the TLT options. If I'm
I,
going to
I
be
love
in the
that.
ETF, I'm going to be in the zeros.
So TLT, highly liquid. They have daily expirations. You can really trade the hell out
I'm
of it.
not in those for the record.
No, I know, but I'm just saying, like, there's a huge options market there in the TLT, which is great because I will do everything I can to avoid going and trading in my futures account. And then I got to think about position sizing and fucking something up and trading these contracts I'm not used to. So I want to stay in the equities market if I could. The TLT calls great option to add some juice, but also JC, this TMF, we have leveraged funds out here these
Yeah.
days, and
Yeah.
they're liquid too. So the TMF is like a double or triple
I know. I
long
just
on
don't
bonds.
like I don't like the leveraged ETFs. You know that.
Same,
Like for me,
same.
if I'm going to be in an ETF, I'm going to be an ETF. If I want the juice, I'm going to be in the options market.
You could take them for a quick hit. And you're right. In a situation like this, you need the double leveraged fund less because the options market is so liquid. I would also prefer that. I'm with you. There are some cases where the options chains will be very illiquid and you got a double leveraged fund. I'm taking it all day.
Um, I just want to give props to the morning show. Big props to the morning
Good
show. There's
stuff.
a reason that we are known all over the street as the best morning show in
Yep.
finance, and it's because of you guys.
Yep.
You guys are in here every day, pumping us up on the chat, telling everybody you know to watch the morning show. So I want you to know I appreciate that more than you'll ever know. But let me tell you something. There's nobody else out there that can rotate into commodities, into bonds like we do, right? Over there, they got these shows they're talking about every fucking day. Every day it's tech this and AI that. We pivot. We pivot
Yeah.
hard when we need
Yeah.
to. And yes, there's a time and a place for technology and AI and speculative growth. But when commodities are moving, we're here talking about it. We're here trading about it. Nobody else is doing that. Nobody's doing that. So, I'm not Mr. Run Around telling everybody how great we are, but sometimes I just want to point out just how great we are. Kudos to us, Mr. Steve Strazza, crushing it over there. Doubles every day. All of these things are coming in commodities. A few weeks ago, they were in speculative growth. A few weeks before that, it was in bonds. Like,
Yep.
Steve Strazza pivoting hard, and I just wanna give us all props, everybody. Izzy, Alfonso, Spencer Israel, Jason Purrs, Sam in the house, everybody, well done across the board. Well done, guys.
Oh yeah, shout out team. What a squad we have. And and you're right. I'm proud of the way we've been zigging while the rest of the market zags all year. We've been early or right on time to so many of these key themes, and it really feels like commodities is going to be the next one. Speculative growth is getting crowded. Everybody's talking about it now. Have you noticed this? Like it's been hot. It's been hot for a while. They've been leading. The stocks are going absolutely crazy. I know some of them aren't behaving so well. Talking about you, Hims, and new nuclears, right? So maybe there's some evidence, early corrective wave there. I don't know.
What
But I
do
do
we
like commodities.
let's pivot back to speculative growth and technology.
Yeah,
Broadcom reporting after the bell.
ASTS. That's another one. Speaking of
That's true.
speculative growth.
What are we
Sorry,
thinking? What
Broadcom.
are we thinking tonight?
It's a big report. I don't like the way that stocks already like overbought and at new all-time highs ahead of the report. This price action, this near-term price action to me, look, you got RSI 14 at 83 here today, or yesterday's close. That near-term price action to me says some really good stuff has been priced in already for tonight's report. So we'll see. I wouldn't expect like a double-digit upside reaction at this point because it looks like it's already baked something in.
I got an interesting one. Throw up Oklo. Throw up.
I really enjoyed you and Herb yesterday. I listened to you guys.
Did you like that? Did you like that? Can you throw that link in the chat, guys? Fonz, throw the link in the chat for the video that Herb and I did yesterday. You know what I love about Herb? Herb is a character, quite the character.
Yep.
He brings a different perspective to the markets than I do or that Strazza does. He looks at things very, very different. We argue all the time, and I love that. I got no problem. It's always a friendly debate. I rip him, he rips me. It's all good. It's all good. And we're going to disagree a lot because we look at things so differently. But that's really, to me, selfishly, the value that Herb Greenberg brings to the table is just how different he looks to the market. So very complimentary. So he's looking at Oklo from the short side here, guys. You see the link? Drop that link in the chat. So anybody who missed
Did
the
you
video
tell him I
yesterday
sold? Did you tell him I sold my Okilo?
I did not, but I did tell him I sold my hymns.
Because it was fine.
And he was very happy to hear that. I'm sure he'd be
Same
happy
team.
to hear that you sold your Oculo also.
I'm gonna text him.
But here's what's really interesting, and here's something that he brought up that I thought was hilarious. So this is Oculo, right? And now if you throw up the next chart, these are the year-to-date returns between the uranium ETF and an Oklo. Look at these returns. I hadn't really realized it until Herb brought this up.
All of them. SMR2, NNE to a degree, CEG. Wow. The AI ones have gone bonky out here.
Wow. Yeah. What a move.
Mooning. But JC, the reason you're taking profits in HIMS and I'm taking profits in Okilo, despite the red flags, right? That's important information. I read a bunch of stuff. Herb sent me over a bunch of reports on the new nuclears. I went through all of them earlier this week. I'm always mindful of that stuff. But we're taking profits because we ran right into overhead supply at a shelf of old highs in both of these charts. If you throw up the Okilo, you could see the old highs right there. Could there be a more logical level to pay yourself after you nail a trade? These things have been up a lot in a short period of time. And HIMS, it's no different. HIMS, it's the same exact thing. So just some big levels, right? I mean, I don't want to put words in your mouth, but that looked like a natural price target to me in the HIMS. No, maybe.
I mean, my target was back to the former highs. We got back to the former highs. So we took profit. It doesn't mean it's over, by the way. Doesn't mean it's over. Here's the difference, by the way, between HIMS and Oklo. Throw up the HIMS real quick, and then we'll go. I want to touch on MP. The difference is it's this big difference. This is a 30% short interest. Okay. Oklo is 11% short interest.
Oh, that's it? Oh.
Right. So Oklo just doesn't have that short squeeze potential that HIMS has. And then if you throw up, so just big difference there for sure. I'd feel a lot more comfortable shorting the one with less short interest than the one with too much.
There's like a headline rush in that space right now. That's what's going on with
in both spaces.
Well, the HIMS is a PR machine. I mean, these guys are a headline machine. They don't miss. It's really incredible.
Before we get into the MP, what's really funny? I
Right.
was talking to Herb yesterday in the video, as you saw, and one of the things he looks at is just how many press releases the companies are filing, right? Because if they're always having to pump up the
Yep.
stock and
Heard that.
telling the story, it's because the income statement is not telling the story, right? The
Yeah.
right? You see what I did there
For
with
the
the income
most
statement?
part.
I know what those things are, right?
There are
The
people who literally have universes based on things like that.
I
Short
love
sellers,
that. I
investigative,
love that idea.
fundamental people.
Fonz, I know we have a meeting later this afternoon. We're definitely talking about that.
So, so do you know what we actually used to do? I worked with some folks, God, 10 years ago. They would look at different microcap newsletters. And if you do paid research, right, you have to disclose a big
Yes.
disclaimer at the end of the report saying this company, this literal public company with ticker symbol, whatever, it's usually 4 or 5 letters in this case, they paid us $10,000 to write this report. And what this shop would do, these short sellers I was working with, they would start their universe from that list of who's
Yep.
paying for research, who's paying for people to say nice things about their stock. That was good. That's good.
Yeah. I like that.
We
I
could
like
bring that.
that.
Yeah. Right?
Yeah. We need to do more work there. There's definitely something there. Nice job. Throw up MP.
I
So this
really
is
liked
another.
what Herb I really liked what Herb was saying here. I'm gonna try to elevator pitch
Did you
his
know that this is the old
red
Molly
flag.
Corp?
I didn't. I didn't. And dude, that one's even like before my time, the Molly
Molly
Corp.
Corp, what there were times when most of you guys were in diapers, where I remember I remember being like, man, I was in probably my mid-20s and there was an ethanol stock surge, right? All these
Yeah.
cycles have all kinds of random shit. And I remember making a list of ethanol stocks, sitting at my desk on Park Avenue, 46th Street, sitting at my desk making a list of ethanol stocks that I wanted to buy. That was the top. That was that day that I made the list of ethanol stocks. That was the top. It was like
Yep.
corn is going to change the way we drive cars. I swear to God,
Yeah,
I'm not making
right.
this up. So like
Ethanol had
every
its
cycle,
moment.
there's like these
Uh-huh.
ridiculous things, right? So anyway, Molly Corp was in one of those cycles where like rare earth metals were going to revolutionize, the dentistry industry. I don't know, I'm making it up. Space exploration, who the hell knows? And that was
Yep.
Molly Corp, and then that was a Dunsky. And
Yep.
then so this guy's CEO of this company, according to Herb, picked
Yep.
up that old Molly Corp for pennies on the dollar, turned it into MP Materials, some Chicago trader, some floor pit trader or something like that.
Yeah. So
I thought that was interesting. And then he picked it up for pennies on the dollar, turned it into this, made a fortune. So good for him. Well
it,
done.
and it's a true story stock in a sense that it is literally a rare earth metals company that's producing or getting those rare earths in the United States. However, the problem with that is that the economics of that business in our country versus the economics of that kind of business over in somewhere like China, it's just nowhere's close. So they're going to have a tough time, I think, succeeding because they're competing with people with far better models or economies of scale than they have. But it's a story, right? Because people want to think we can get our own rare earth metals, right, and be rare earth independent here in the United States. So that's kind of what they're selling. And he has a certain emphasis on shareholder mix. So there's a lot of retail in it. You can kind of tell what stocks have a lot of retail in them. They all kind of trade these similar patterns. They look really speculative, growthy a lot of times, and MP has that archy base look to it. So I get it. I get it. I've taken shots at this one unsuccessfully. That's a
Um, for me, it's a mess,
Yep.
right? It's a mess.
Yep.
I mean, there's no better way to explain this. We're right near that anchored VWAP from the highs. We're below that 61.8% retracement. I
Did
got
we
to
get
see it. I don't want to be short. I don't want to be long. I don't want anything to do with this. So,
so? Did we just get a little pop in the market or no? Nothing.
little bit, I guess, a little bit. I'm gonna hop, guys. We got our conference call. Premium members of ASC Research are gonna receive their conference call today. I'm gonna go ahead and record that. If you want to drop a link in the chat, anybody who is not a premium member of Also Charge can go ahead and check that out. Guys, I want you to know how much I appreciate, you guys being here. We get to talk about markets. We get to do this together. We get to navigate markets as a team, not just like Strazza and the rest of us and Sam and Jason and Grant and everybody. But you guys too, right? And a lot of the ideas that you guys come up with, we go ahead and execute. So that's what this is all about. Share your ideas. Let us know what you think. We're always open-minded. I read recently in a book that the mind is like a parachute. It only works if it's open. I thought that was
Love
so
that.
good. It was so good. It
Love
really
that.
resonated with me. So, all right, Strazza, try not to get us canceled. Adios.
Okay. Good luck on the call. Bye. All right. Izzy, you can run that bumper. Let's bring Matt Caruso on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Matt.
Hey, good morning. How's it going, Steve?
Good, man. Thanks for joining us.
Yeah, pleasure to be back. This is the second time.
Are you having fun with this market? A little V-shaped recovery off of the April lows. It's been kind of a trader's paradise out here this year.
Yeah, it's been interesting. It's one of those years where the market does everything no one expects, which is you kind of get used to it after a while.
Yep.
Yeah,
What is it? The market's designed to fool most of the people most of the time. Love that.
you know what? And it's one of those sayings that more time goes on, it's just so true. It's amazing. Even yourself, sometimes as soon as you kind of go off your regular path and you start to just go gut feeling, sometimes gut feeling works. But in general, once you feel the emotions start to ramp, you tend to end up in the wrong place at the wrong time.
Well, I end up messing with myself. You ever have like a pattern or a trade that just seems clean and clear as day, and then you start thinking to yourself, this is too good to be true. Everybody sees it. It can't work, right? I'll start psyching myself out. If it's too good, I'll be like, I don't know. Can we trust it?
Well, there was one recently, actually. Duolingo was set up really nice with a little flag.
Yep.
And there was a friend of mine on X. He was saying how like, it looks so good, but maybe it's too good. And it turns out it kind of broke the downtrend line, flop right back over. So
there you go.
There's a bit of that to it for sure. Yeah.
So getting a little pop in the futures here this morning, I guess. We're still in this trade war headline driven tape. I'm seeing Xi and Trump to hold a call. This is reported, I guess, by the Chinese state media, so you got to trust it. How much time do you spend paying attention to all these headlines? Because boy, have there been a lot this year.
So actually, what I do for myself is like on X, I have like a news a feed of people I consider like news-ish, and
Yeah, totally.
you just have headline, like less opinion, more headlines. And so every morning, like first thing I wake up, that's what I go through, all the headlines.
Nice curated list of only the good ones, kind of thing.
Exactly.
Cool.
Maybe like 7, 8 accounts in there. Super helpful. I mean, to think that's free. I remember when I first got a Bloomberg terminal, we were trading. This was like years ago when X was just kind of kicking off.
The news feed.
And it's like, wow, like X, which I'm not paying anything for, had some news quicker than Bloomberg, which was like $3,000 a month at the time or whatever it was. So
Yeah, totally.
but, I always kick off with the news.
Yeah.
Sorry?
Start charging. Don't tell Elon Musk that. He'll start charging us all.
I already started, so
I know.
we'll keep jacking the rates. Yeah.
So does it factor into your trading or what you think? You're mindful of it, kind of what's going on, what the headline risks are if there is a big meeting. How much is it actually affecting your decision making?
No, it's important. Like also even like how quickly you put on exposure. Like I have a lot of rules around like how much I can put on in a single day. Like you look back at some of like the big mistakes you've made or the big rollovers that you get caught in. Usually you move too fast and you get like hit with something.
Yeah.
So whenever there's news, just kind of like, slow it down, this tape a little bit, or oftentimes, like the concept of news failure, if something's supposed to be good and it doesn't follow through, that'll like change my view of what I think the markets will do in the short term, whether it's like a sell on news, buy on news type of thing, so all super helpful.
Awesome. So what have you been involved in? What have you been trading out here lately?
So off the bottom, I to me it looked like we were bottoming. I was like starting to build pretty soon off the bottom there, which is great. It was just coming off every bottom, it's always a bit difficult to figure out who the winners are going to be. It's always you go relative strength, which have not fallen, but then there's always the difficulty coming out of a market like that. Sometimes the leaders are just because they're safe havens, so then they don't kind of follow through what the market does. So I always kind of start off a bit of like a shotgun approach, and the ones that have stuck the best have been everything like AI or crypto related, and that's what I've just been pressing. So I have some nice positions in Hood, GEV, Tesla, Palantir. Those have really been the runners. So I've been focusing on those.
So I love what you just said, and we run into this. We're big relative strength people. We're always running scans, and what we've started to do over the years is when we're running leadership scans, so relative strength scans through corrective waves or down markets, we cut out the defensive names. will
Mhm.
literally go in and remove staples. I don't really want healthcare in there either.
Right.
Utilities, real estate. We'll strip out anything that seems defensive. Sometimes you got defensive names that sneak into other sectors too. We'll try and
Mhm.
pull them out to avoid that because you're right. And that's a relative strength scanning trap, especially when you're trying to get
100%.
something off the lows.
I remember like early on, it's like like it was like early 2000s when I started, and there'd be corrections, and like I would be trying to run these art like relative strength scans, and it's like then you're in these slow. You're like, oh, okay, great. PepsiCo is good. Like this next stock is you're just learning the basics, like relative strength, which you have
Right.
to watch, and then the market comes back, and you're like, wait a second, this is like an old dog.
What
Like,
happened to
why
Pepsi?
am I in Pepsi? Or whatever it is at the time. So for sure, for sure.
Speculative growth has been good. Risk on groups have been good. I think participation keeps expanding. Have you seen these quantum stocks, this space and exploration stuff? A lot of these long duration equities that people said would never see these valuations from 2021 again seem to be well on their way there. That's pretty interesting. What do you think about risk appetite?
Yeah, I think it's been really strong. Just the past couple of days, especially yesterday, I start to see I mean, bull markets are all rotations, so it's like the market keeps going up, it fools everyone. Today, this group is stronger than that group. But yesterday was like noticeable. Like I put on some positions on Meta in the morning as a follow through after it paused after its breakout. And yesterday was the first day in a while where like really the mega caps had a good day. Most of those like
Yep.
outperformed the Q. So I don't know if maybe that's the signs of maybe there's a little bit of a defensive rotation, but then at the same time, small caps started to break out a couple of days ago with that massive downtrend line. So I think it's just a really overall a broadening bull market, and you just want to avoid those. The most frustrating thing about these bulls is that sometimes you have positions. There's a quick 2 or 3 down day swipe lower. They stop you out of like 50% or 80% of your positions, and then it just goes right back up. So I think it's just like what I've learned with time is just ease in. Like today, if this is a stock that you want to position and take this one today, that one tomorrow, the one after. So if ever there is that 2 or 3 day swipe, which we all know it's coming, is it now or in 3 weeks? We don't know. You're not
Right.
banged out of everything because all your stops are hit. So
Yep.
just building in slowly, but it's hard to kind of say something looks awful. I find everything's still like gaining stream. Like we're just markets are just getting near all-time highs on the Qs. Small caps breaking above their downtrend line. Speculative growth has been strong. If that's strong, things are doing well. So
It you say nothing really looks awful. The bad stuff keeps failing to break down and playing catch up. Like, I'm looking at
mhm.
the home builders this morning as a group that's been really bad, stuck on the lows, hasn't bounced at all. And boy, it looks like they want to bounce. That would be one I would think maybe
Yeah.
maybe that's a top. Maybe that breaks down. They can't break down anything out here.
Well,
Not
and I had a really interesting call yesterday with clients. We were talking about someone was asking about Toll Brothers and whatnot, and one I'm watching closely in the group is Rocket Mortgages, Arcade. Well, not mortgages,
Yeah.
it's called Rocket RKT, which is cool.
Yep.
But the thing was the home builders. It's something that's interesting for those who are like looking at the group that you bring it up. Is the U.S. has become such like a bifurcated market in housing as well between like the South and the Northeast type of thing. So
Yeah.
like I was actually looking at like inventory levels, how just in Florida alone has
Yep.
and there's a guy Nick Grelly, he's probably like the Reventure app, he was putting this data out, and he was saying how
Okay.
like the Florida right now has I think like 100,000 more listings than all of the Northeast put together. That's like New York, Pennsylvania, Maryland,
Crazy.
everything,
Mhm.
which is pretty wild when you think about it. So that's why I mean I think if you're like in an overbuilt area and you're a home builder, it could like lag on you. So I think you want to be selective on which ones you go with. But
We've
yeah.
we've been looking at real estate in Southwest Florida, and I'll tell you, it's one like brand new community after the next, and they're all done by home builders. So it'll be like, you look at one community, right, all off major highways, kind of in the middle of nowhere. A lot of these things
Mhm.
pop up. DR Horton is that one. Okay, Taylor Morrison is the next one. Quarter mile down the road, Lennar is this one. Toll Brothers is this one, and you
Yeah.
just keep going, and they just keep popping up. And I'm talking to realtors, and like, we buy them when they're coming soon, and then we sell them a year later, and then we buy the next coming soon one in the new home builder community right down the street. Like, okay, that's interesting, but yeah, there is a lot. So you're saying look at the exposures, right, and the mix, and depending on what markets they're in. Like I know Lennar is real heavy Florida, and look at
Yeah,
maybe
I think
compare to some others.
I mean, it doesn't mean they can't do well, but it's just like, know what you're getting involved with.
Yep.
Like it's a regional type of business, and even that like that flipping game. It's so it's funny. I mean, we're all stock guys here, but you always hear like it's always it's always like the real estate guys versus the stock who has a better business to work with. But I remember like I'm in Canada, so like in Toronto for years it was all about like flipping condos and this and that. And now that the market's softened, so many people who had bought pre and they're getting blown out really hard. And that's a high margin business. Like it's a levered
Yeah.
business. So
I
it
don't know
works
how
well
these
when it
guys,
works well. When it works bad, it's real bad.
they're the real crazies. I don't know how they do it. I mean, stocks, I can understand, but real estate prices. Toronto was one of those red hot markets
Yeah,
recently, right?
for years. It's wild to see the prices. Like, I mean, you look
It's
at like
crazy, right?
data, like general stats, and you see what median home incomes are, family incomes, and all that. And you look at housing prices. It's like I don't understand.
How do
It's
people live?
wild how they're up there. I think they finally sort of hit a wall. I think because rates have been coming down in Canada a lot more aggressively than the U.S. and they're still softening going. When rates fall and then housing still can't pick up, there's kind of like it's more
Yep,
about too much debt than just the interest rate. So it's something to watch.
totally.
Yeah.
Matt, what's your typical time frame on a trade?
I'd say I have two time frames. I put everything on with the hope of holding it for like 3 to 4 months. That's like my
Yeah,
target of my hold. And
love
if it
that.
works out, great. If not, it's probably like 1 to 2 weeks. So like if you look at my trades, it's like there's two camps. The good ones, they end up for a while, and everything else is like 1 to 2 weeks.
So you just keep analyzing the data as it comes in, and your time frame can actually shift based on
So
what you
it's like
see.
I go into stocks like I mean, I think you're familiar with the work of like William O'Neill, like how to,
Of course.
that's yeah. So
Yeah.
it's like always my focus is always trying to find like the big leaders of each cycle. And when you catch them, it's like usually pretty obvious. Like they blast off and they rock and roll. So if I'm able to get positioned in a couple of those, like right now I have Robinhood, which is doing great, and some others, but like there's others I had along the way where you're up that 5, 10, 15%, the market's moving, it's not moving. And whenever you see that like lagging, again, back to relative strength, which is such a core part of what we do, it's if it's showing that lag or that relative strength after a couple of weeks, I kick it out and free up the capital for something else. Yeah, so
Love
that's
that.
always like the perspective that like underlies like whether you want to hold it or not.
So you're using relative strength, and kind of what else do you have in your toolbox that's informing you on your trades?
I try and keep it really simple. I use really just, I'd say maybe 3 or 4 tools. I use like relative strength always to kind of figure out which pool I want to be playing in. Then
Yep.
for like market related, there's a couple of key tools I use. I look at like net highs, net lows for like general
Yep.
trend.
Yep.
Then after I look at something like I kind of call it the FOMO indicator, but it's just a breadth indicator, which it looks at the percentage of stocks above their own 5-day average. So I know most people
Right.
look at above the 50 or 200, but I like above the 5-day average. To me, that's like the real impulse buy. Like if you have like, and sometimes you'll see like a reading, like 90% of stocks are above their 5-day. If it's like 90% of stocks are above their 5-day, like in the past week, everyone's hit the buy button. And same thing in
Right.
reverse. If only 10% are above, like regardless of long-term trends, like short-term, that's a lot of like one-sided action. So that kind of like
That's
just
interesting.
helps me, even if we're in an uptrend, but we're like at 92% on this like FOMO indicators. Like, let me wait a couple of days for things to cool before I keep adding exposure.
So are you starting with like these broader market indicators? Basically, you're checking on the health of the
Mhm.
whole market. And then from there, you're kind of drilling into like a top-down approach using relative strength. But those broader market indicators are kind of informing you on how aggressive to maybe be, or where to look, or what to look for.
Yeah, so I always try and like start off like in given those broad market, like I'm never like an all or nothing kind of guy. Like I always like to
Mhm.
kind of bend, because I find the all or nothing thinking kind of ends up, it'll blow you up one cycle if you're really off.
Yeah.
So like what I like to do is kind of like look at the market. If let's say we have really a lot of net lows or things are breaking down like back in January, okay, this is a market where you should be like 0 to 30% invested. We all love trading, so it's not like I can't find a trade out there, but like I shouldn't be
Sure.
on margin or I'm gonna risk blowing
Right.
myself up. And same like coming off the bottom, as soon as you see things improving, like the NYSE was quick to get to net highs. It's like, look, if you're still at 0 invested because you think rates are going to be bad and this and that or tariffs, like you're fighting what the tape is telling you. So then after I force myself to put on some exposure, and I found that
Yeah.
always helps me stay in line cycle. I mean, you could still suck one cycle and not do super great, but you're never going to do horrible. So that's the aim, is to never have those really bad like outlier cycles. And when you align with the market, that's when I tend to do super well. So yeah,
Yeah, you
that's
can't
how I
fight
kind
it.
of
I
go
mean,
about it.
we were sitting here a couple weeks ago thinking to ourselves, it's probably not going to be a V-shaped recovery, but it could be. It could be. We're open to it. Here's the things that might happen along the way if that ends up being the case. And then with every passing day, Europe's doing a V, then industrials are doing a V here. So this is probably a V, guys. And they're like, but you just said it's probably going to be a rounding bottom. Well, shit, that changed.
Well, you know what? It's funny enough. So like I had a really great year in 2020. And like I like most people, like I studied the Market Wizards books.
2020 was a blast.
Yeah, it was
I mean,
amazing. It was great, right? But I
what do we
remember like I study a lot of past cycles, and when the Fed does stuff, that helps, and all this kind. So I was like super
Sure.
bullish coming off the bottom. And look, I'm not Paul Tudor Jones. I don't have anywhere near the
Nice.
money of Paul Tudor Jones. I don't have the credibility of Paul Tudor Jones. But I remember being like super loaded up, like soon after the bottom. And he
Yeah.
was on CNBC, and it's like, okay, wow, let's see what Paul has to say. He's like, look, I can tell you one thing: we're not getting a V-shaped bottom. And like here I am, like betting on a V-shaped bottom. And it's like, and the thing is, like, no one knows what's gonna happen. You could be
No.
like one of the best traders of all time. You won't know. So you have to just follow your process.
Yep.
And for me, it's just about like bending with what the tools. Like I really stopped the idea of thinking I can guess what's going to happen next. It's just flow with my tools and go.
And I'll bet PTJ, being the good technician he is, changed his mind eventually on that.
And I bet he was probably long anyway, saying like, I don't
Yeah.
think we're going to get it. And then he just stayed long as the market kept grinding higher. Yeah.
And here's what else for everybody. When he changed his mind, I'll bet he didn't come back on TV and tell you all about it. So.
Or he did when he already changed his mind. He was already positioned in his new positions, So, but I've seen this. I don't know if you've noticed it, but I've seen this odd thing where like a lot of these billionaires that are like amazing finance guys, Ray Dalio, Paul Tudor Jones, Jim Rogers. It's interesting. Like I was talking about this with a friend the other day. They make usually all of their money, their billions, to the long side, and then it's like I noticed a lot of them. They kind of get up there in age. They retire and they become very negative. They're always talking about the country's going to go broke and this is. And it's like odd. They kind of like shift from what like kind of gave them all their greatness, and then they have this like maybe I don't know. It's a different view of life at that point, and they're worried about what can go wrong. But it's odd that so many of them tend to be like almost sounding like perma bears is after a career of being long all the time.
I think that's such an interesting point. I've never thought of it like that. If I had to guess at why, my initial inclination would be they were in get money mode, so they were maybe a little bit risk seeking in their younger days, and then once they have their billions, they're in keep money mode, and they're trying to preserve capital, and they're thinking way more about the risks and how they might lose that stack that they made. But man, when Ray Dalio comes on, he's on TV every other day now. He was on yesterday. I have to change the channel. I can't listen to it anymore. It's just the absolute worst. All of his books are terrible. All of his advice is terrible. He can really hurt investors if you listen to one of the greatest investors of all time is out here actually doing a lot of damage to your everyday investor with his crazy comments. It's crazy. It's nuts.
Well, the thing is too, it's like what they talk about is usually what they're doing. Like I like Ray's work. I mean, I wish he would put more stuff about his actual work instead of just, like his new book, How Countries Go Broke, which is like very macro, but like, if you listen to his stuff, he talks about how like, designing a portfolio should be, you want like, let's say 10 stocks with low correlations between assets. That's like the holy grail. You get all the upside, but lower. I mean, so clearly, like, I don't think like, a fund managing that kind of capital is just like short because he's negative type of thing. That's not at all what they're doing. But that's why I was like, that's what I mean. Exactly to your point. Like you come on the air, like probably doesn't reflect at all how your positioning is. And it's always this negative stance. So it's frustrating. You want to learn from them because clearly, they built fortunes. And at the same time, if you just kind of go by their tone, it won't really lead you in the right way if you're trying to make some good money in the markets. So.
All right, Matt, what do you got your eyes on here? It's June 5th. We're almost halfway through the year. Amazing how time flies. Because I think we're having fun. Bull markets, time flies when you're having fun like this. What do you have your eyes on? What kind of groups and industry groups or stocks are you watching? Give us some ideas before you go.
Yeah, so for me, this is like an AI bull market, a little bit of crypto like stuff, and I'm not a big crypto guy, but it's been really strong. So I've been really focused on everything AI. I think it's the 1990s. It's the internet bull market, and other stuff can work, but it's going to be subpar. This morning, one I'm watching very closely is NBIS. I don't know if you know Nebius Group. So they're like
old. Is this the old Russia? The
old Russia thing, but totally reimagined. Like I think the guys were Russian, but they moved to the US, and so they're at, like their main business is they build these. They're called neo clouds. Kind of CoreWeave. I'm sure everyone.
Look at this chart. Wow.
Yeah. So beautiful, and they also have like an autonomous vehicle company that they own. They have like it's almost like a small weird AI amalgamation of companies.
So they're doing like everything sketchy under the sun. It sounds like. Did you just say neo clouds?
Yeah.
What's that?
So CoreWeave is. So CoreWeave, like they offer data centers. You say, well, okay, well, like what that's not new. Like there's Meta, there's AWS, there's Google, whatever, Azure, all the different clouds. NeoCloud, what they do is they're basically just totally focused on like these NVIDIA GPUs for AI scaling. So if you're like someone who wants to scale like AI data center type of stuff, you can literally like go to their site, 5 minutes, you're up and running, and you have like the world's fastest GPUs. And that's like so it's a pure play. Like that's all they focus on. It's that's very much their main business.
The deals that are being made out here with the AI data centers and these AI utilities and power companies and the new nuclears, it seems like every other day there's a
Yeah.
deal being announced between these companies. They just CoreWeave, like you mentioned, just did one with I think Applied Digital. Stock's up like 75% since,
Saw that.
and that's one of the
That's why for me this is like the space. Like if you go back and study the 90s, it was just like monster after monster. And what's cool is like every few months there's like, you know, this technology is born and there's like a new company that's like benefiting from that technology. They go on a massive run up, and you know, so you really want to keep your eyes open on always what's kind of popping. So
so you keep mentioning the 90s, Matt. Where in the 90s do you think we are?
I think we're like 94.
Nice.
No,
Sick.
because if you look at the 90s, and I want to do a nice YouTube video about this. I don't do them
Mhm.
often, but like when an idea comes to me. Like if you look at the 90s, like the whole internet rollout, like you started off with infrastructure. Like the original
Right.
like tech stocks were boring. Like Cisco was like switches, routers, you know, modems
Mhm.
or Ethernet cables. Like it wasn't Yahoo, AOL. Those came out like 97, 98. And that was like
Yeah.
the output of the internet. So like
They
with
had to
AI
build the
now,
infrastructure out first.
yeah, exactly. It's like now, I mean, okay, there's Chat GPT, but there's not one real public company that's a new AI specific service that's
Right.
out yet. You know, like they're trying maybe with autonomous vehicles. So I think we're still like in that infrastructure build out. Like, you know, they're talking about building electricity. Like Nvidia is like an infrastructure. It's the
Right.
chips. You know, so that's why I think it puts us. I don't know if the last 10 years or 6 years things move faster nowadays, but
Yep.
I still think we're like 94 era. Yeah.
And this thing seems to be moving very fast. What Matt's basically saying is we're just building out the foundation for this new technological revolution. We haven't even seen all the cool products and services that are about to come from it, right? And that's going to
100%.
drive more growth, more market returns, higher GDP rate, all that fun stuff.
And if you look at a lot of even like the startup incubators, like Y Combinator and all this stuff, you know,
Yep.
they've made like massive like growth in the number of like cohorts that they're taking on. They won't take
Mhm.
on any new startups if it's not an AI startup.
Yep.
So like it's just to think like all of these companies are brewing, like, you know, as everyone's worried about tariffs and all that, people are pouring billions of dollars into all these startups. We're gonna have like, I mean, it's been so dead with the IPO market. We're gonna have in the next year or two, I think, like this crazy group of IPOs coming to the market that's gonna like have all these interesting new companies redesigning things. It doesn't have to always be futuristic. Sometimes it's just companies that are going to eat the lunch of an existing company that's doing it like old school. So it's gonna
I
be
really
wild.
hope so. I
Mhm.
hope those companies don't all stay private too long.
You know, I that's been the situation, but that's because there hasn't been a lot of exciting new stuff. So I guess they were able
Right.
to raise enough capital because there hasn't been a lot. But if you look at even like, you know, CoreWeave came to market, NBIS is on the market. Like they just did a financing a couple of days ago. So I think
Yeah.
there's so much demand. Like they need capital markets again.
Well, what's just happened over the course of the past few weeks with CoreWeave going absolutely crazy? It's like $80 billion stock now, right? This was the big AI IPO so far this year for the most part. Great success. Everybody
Mhm.
else is watching that.
Yeah.
So hopefully maybe we get more soon because IPO market's still getting better. But man, you mentioned 2020. Let's go back. Bring me back to 2020. That was some IPO market. Whew.
Oh yeah, 100%. That was some good stuff. Yeah, for sure.
All right. Any other thoughts before we let you go, Matt? This has been a fun talk, man.
Yeah, no, it's been awesome. I think it's just like put yourself, if you say if I can go back to 95, like would I be focused on anything outside of the internet like realm? It would be no, because that's where all the heat's gonna be. So you
Yeah.
don't want to just chase junk, you want to chase real companies, but you have to, so that's like the work. You want to like, you know, try and separate the junk from the real stuff. But it's gonna be super exciting times. Looking forward to it.
I love it. Can't bet against American tech. These stocks are just so good. They keep bouncing back.
Remember
And
just a couple of months ago, it was like this is the end of like US
oh yeah,
excellence and Europe's coming
oh yeah,
back. And look, I
yeah,
love vacation in Europe and I know a lot of great European friends, but
yeah.
in terms of innovation, I still think US has the crown by far. So we'll see.
No, it's like you know, European stocks had 2 good quarters. Oh, it's the end of American exceptionalism. Okay,
Yeah.
well, all right, yeah, whatever.
I
All
mean,
right.
you know, my background's Italian and I love to vacation in Italy, but you know, I don't know if a lot of those areas are going to be like designing the next big data centers, you know. So
I don't think so. My brother and parents are actually going to Italy next week, so we'll have some boots on the ground out there. I'll report back.
sounds good. Sounds good.
Thanks so much, Matt. This has been a pleasure. Thanks for coming on, chatting markets with me today. And we'll see you soon.
You got it. Talk soon.
That was a fun conversation. We're over here talking about commodities and trends in commodity stocks and all these, silver, copper. Matt comes on like, how could you buy anything but AI stocks? And I don't think he's wrong, right? Over longer time frames. Is there anything more exciting? Speculative growth, large cap growth. I think it's back to growth, back to tech. Doesn't mean commodity stocks can't work. Broadening of participation, you can call it rotation. It usually gets called rotation, right? But over longer time frames, over a primary trend time frame, that sector rotation or market rotation that people always talk about is really just an expansion in participation, right? It's a broadening of market internals. It's more things working over longer time frames. Right? Something stops working for a couple months, something else starts working. When you zoom out on these charts, what it ends up looking like over the primary trend cycle is, oh wow, most things are working. Almost everything worked. That's what good bull markets are like. And if we're going to be in some sort of prolonged cycle, you're going to look back at the end of it, and that list of groups or areas or even niche markets that did not participate, that did not work. I'm looking at cannabis stocks or solar energy. The list of groups that don't work at the end of a bull market is very, very short. So that's it. I'm all by myself today. No Spencer, no JC. Bell rings in 6 minutes here. It's a fast market. We got doubles to sell in the Freeport Mac round. I think our AG calls went 10x today. I want to give one final reminder. I'm all about commodities right now. The entire analyst is all in on commodities. We all just can't stop writing about them. So Jason Pers and myself, our resident futures trader, are going to come on tomorrow at 1 o'clock and run down our whole commodities playbook. Just break it all down. I think it's so important. Don't miss it. Can we drop the link in the chat one last time before we go, Fonz? Bang. There it is, the commodities playbook. And then do we want to just leave everybody with a pretty chart of silver? Alfonso, let's throw up the silver and just run down what we're looking at here. Are the gains holding pre-market? Let's see. God, this applied digital, it up another 30% yesterday. Silver out here about to get overbought. Want to see that overbought reading. Absolutely love it. We're at RSI about 69 right now, breaking out above a shelf of resistance. Call it 35.25. That's really the level. This is going. I think it's got $50 written all over it. Look for the silver miners to start playing some serious catch up to gold and the gold miners. I think that's where the beta is going to be. That's where the juice is going to be. And if you want confirmation on that theme, I think it's as simple as the silver gold ratio. Pull up a ratio of silver relative to gold. I don't know if we have that chart. If that scoops and scores and breaks back into its old range, it just recently broke down to multi-year lows. You get a scoop and score in silver versus gold, that tells you the animal spirits are alive and well out in the metals market, and you want to be long the riskiest assets. And that's silver miners, all the crazy stuff. Look out for platinum. Platinum's coming too. Some exciting stuff going on with platinum at central banks around the world. Commodities have arrived. All right, everybody, that's it. I'm not going to do a recess by myself, but I am excited to watch the NBA Finals tonight. Happy Thursday, everybody. Stay safe out there, and we'll see you tomorrow. Adios.
I can't take no loss. I don't even know what it